The following is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Hi everyone, Basil Chapman, Tiger Technicians Hour. My pleasure to be here on Monday through Friday, 11 o'clock till noon. That's this time right here. You can call me at 877-927-6648. And why am I looking at this ESZ? Minus 13, ESU. Oh, that was an ESU that I was looking at over there. It was still active. I couldn't believe it. All right. The E-minis are down 13, down 14. This is really a very interesting move that we've got here today. Why? Because the Dow is down 161 at 16,530. We'll talk about the Fed right in a moment. Just let's say that the S&P is down 15 at 1974. You've got the comp index down 26 at 48.67. Interesting enough, gold is up $18 at 11.35. At 11.35.36. I remember we were looking at that, I think 2 days ago. I said a breakout could take you even to the 11.33, 11.35 area. Well, we'll talk about that as well, because the whole thing, what the Fed did yesterday was really important. What they didn't do yesterday was really important. Silver's up 17 cents at 15.01. Platinum's down, high-grade copper's down sharply, down 2.3. Crude oil's down 1 at 46. You've got bonds up over $1.50, and the dollar was down somewhat before. Now it's up 16 cents at 94.84. Okay, let's go into the story. First of all, let me just say, we had some really fabulous analysis of the markets earlier on. We had Larry, we had Tom and Tommy. This is an important period, and I want to show you exactly when I say important period. Let me show you what I'm looking at here. I had an email from someone this morning who said, those weekly charts look terrible. Stop looking at those 120s and daily charts, because, how could I not agree? I've been talking about that forever. I've been talking about the monthly chart, the Roman candle of August in the monthly charts. Look at this E-mini. Spikes up on the Fed news. First of all, it kind of goes wishy-washy, wishy-washy. Then it goes down, and then it spikes up. The E-minis go to 2011.75. Just one spiral in leg E in the Chapman wave. And then with the MACD still very negative, I was actually out at the time. I especially said, hey, had some guests visiting. I said, you know what? Let's go to the Museum of Fine Arts. I do not want to be around because I know that I'm going to overthink it and overtrade and over this and over that. I want to just be out there because the chart formations that I've looked at suggest a bunch of things, and I don't want the Fed is stuck in this Japanization of our U.S. bonds. That's the replication of the 0% rate that has been there forever. And I don't know how they can get out of it right now. I'm out of here. Let's just go. So, of course, we came back. And but while I was out, of course, I had to keep checking my cell phone. And there it is, the Fed, the big rally going to the Fed, announcement to a sort of a kind of a little bit of a pop to Dow 68 up and maybe a little more. And then whoosh. The next thing I know, I thought, oh, gee. Next thing I know, whoosh, down, I see 46. That wasn't the price. This is what I looked at that moment, put it off, kept looking at the different odd things, the Copleys and the whatever it was. And the next thing I know, I see that the Dow is up 178. And I said to myself, wow, 178, something. So they obviously didn't raise. And then the friend with me, turned around and said, oh, it looks like the Fed is keeping the rates the same. I said, that's what the market seems to think. And then I said to him, but you know what? I don't know if the market can really like that. I don't understand why it's up like this. Oh, arguing about my business. Next thing I know, Dow's down again. So that kind of reception says to me that, no, I have to continually look at the daily chart and 120-minute chart because subscribers want to know what to do right now, but I'm also looking at the bigger picture. And I haven't changed anything. Now let me go to the bigger picture and I can go through all these little nuances, which are very important. Let's just make this smaller, put it in here. That's the 120-minute chart. Look at the implications of what's going on here. In my daily newsletter, the opening call, I talk about patterns all the time. We look at patterns. And we've seen over the year, I wonder how many charts I've sent in the, what is it, it's over 12 years, right? I've been at TFNN. So I had the newsletter since 2003, I believe. So I wonder how many charts I've sent. Because if you think about it, just this week, let me just get this right here. Let me see. Right here. Click. Okay. So right here, we're looking at, this is just one of the charts that I sent this morning. There are all these charts. I've actually taken a whole bunch off already. So that's every day between 5 and 7 charts on the weekend. Sometimes they're 13. So let's just add, that's 5, 21. Let's just say 30 charts, right? More than that, but let's just say 30 charts, and you've got 52 weeks of the year, because even when I'm away, I send out charts. That adds up. Multiply that by 10 or 11 or 12. It's thousands and thousands of charts, all right? So the patterns we look at are just straight line moves, whoosh, straight line move, and peaks in the Chapman wave notation, of course. But it's basically a straight line move or arches or cups. And sometimes they can be a proper cup formation, a rounding semicircle. And other times they could be V-shape and inverted. So it's just 3 patterns: straight line, up or down, cup or arch, and the cup and arch could either be a cup or a V-shaped pattern. So we've just got 3 patterns. And I go through these things. This is the VIX index. That was as of last night. The low was 7.68. Do you know that the VIX index, the TVIX, the 200% long, the volatility index, had a 40% move between yesterday afternoon's low of 768 and today? What's today's high? Today's high on the VIX index is TVIX. TVI, not the VIX itself. This is the trading vehicle, one of the many trading vehicles. A high today of 1114. All right, 1114. You're talking about a move here that basically suggests this is almost a yearly move in some stocks, right? And you've just had that in the volatility index. Not only that, my Chapman wave trend gauge is flashing from yesterday again, and it's suggesting that what we're looking at here is a situation that the trend got to a very overbought level. And that the flashing signal from yesterday was that today we should see a 7 to 9 point move in the futures at some stage that basically should affect and effect the cash indexes positively. But I said that it could come from a low. And if it comes from a low, that's going to be very important where that rally stops. And then what we're looking at is something even more important. Let me just do this for 1 second. I'm doing 2 things at once. So let me show you something here. So we went from 7.68. I knew there was an 8 there. And what did I say? It was 11. The high today was 1114. 1114. I think it's 46%. How much is that? 45%. A 45% rally. And that's remarkable, right? In hours. In fact, it was more overnight, and then it did go from the day to the next day. And that's very interesting. Sometimes these things happen overnight, and there's nothing you can do about it. So my thinking here is, let's go back to the patterns, because we're all about patterns. This is the pattern I drew, that the lowercase h pattern can go into that first arch. If it holds above the left side low bar, that's very good because it'll make another arch. It could go higher above the previous arch. If it does that, you're getting an even bigger H formation. But the H, lowercase h, turns into an M, lowercase m. And then you can get a continuous pattern that says you can go to an even larger M-shaped pattern. Well, lo and behold, there's your 1H. There's, you can call that your second H, although it's in 2, but call it a second H. And here's your third H. And all I was trying to do, and I had this last night, I had it already typed up. I want to buy the 300% long position of the Dow at the opening this morning. Well, of course, I just took that right off. I said, how could I wanted to do it, but how do you know what the stop would be? So then I thought, okay, maybe I'll make it after the first 5 minutes. Then I thought, okay, I'll do an update for my subscribers at 10. And that update is merely to see whether there were better prices, that options exploration could give a couple of trades. I decided, you know what, I'm basically stepping back. I have one potential trade, but it's only under very certain conditions. Mostly, why am I in this period of flux like the market? I know what the patterns are, but it's very difficult to give the stops and the buy stops when you have this kind of volatility. We got stopped out of a couple of fabulous positions only because the moves were just so big. I don't want to take big losses. I don't want small position with a small loss. We're back. We're in the game. I don't want to be out of the game just because I take a huge bet. Done that. Been there. A long time ago. Long time ago. It's not fun. Then you just watch the market and you can't come back until you've built up another pool to be able to play. Not nice. So, those are the things you want to avoid. Okay, so where are we? Look, I drew this in. I'm going to make this bigger. I'm going to make this bigger because I want you to really see it. So this is what I give my subscribers every day. That's just one of the things that I give. The MACD is still very strong. The slow stochastic is still over 82%. The day is young. We could close down 400 points. I don't think so because look what you got. You got the short-term trading index, Richard Arm's short-term trading index. It's 4.36. That's way up. Look what happened when it hit 4.20 back on the 24th of August. You got a fabulous rally. What happened when it got to 5.52 on the 1st of September? You got a fabulous rally. These are small percentages, but it's a great rally. Now, big percentages for the rally, but small points if you're looking at the overall chart itself. Look what happened when the short-term trading index went to, I did that already, all three of them. So today we've got the same thing. We've got a plunge to the downside, holding the support in the S&P, just nicking it by a tad in the daily chart of the Dow. Day is young, but there's a real good chance that we're still in this trading pattern. And one of the reasons why I say that is that the IBB is only down 2 to 3 points after being up 8 points yesterday. Remember we had a call yesterday. We were talking about that. We were looking at what would constitute, I think it was Ben in Tallahassee, we were talking about the S&P, and then we spoke about the IBB. So what I'm looking at here says that we might have reached a very options exploration. Boy, by the end of the day, they could have a nice spike to the upside. So I'm looking at a peak D in the 120-minute chart of the Dow, right? And I'm looking at a spike, a leg A up in the VIX index. I'll talk more about it. This is such an important period. I want to spend Technical Friday. That's what we'll look at. I'll be right back.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman wave sequence. Using the Chapman wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Basil takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi, folks. We're back, and I'm looking at the ESZ 10-minute chart, and looks to me like it's going to try its very best to get to a leg D, and that leg D will be 25 cents above 1965.50. We're at 1963 right now, and that's the way it's looking. It's taking a little bit of time. But if it can get to the 1968.30 area, no, 1968.75 area, if it can do that in the next 30 minutes to 40 minutes, then you have a chance to go to the 200-period moving average of 1973. If you arch over and you start to take out at any point during the day, in fact, if you take out 1956 support, it's all over. It's a real problem. I don't think the VIX is. I think the VIX will remain high above 21, 22 area, and that would be a negative. And I'll talk about that in a moment. Just a quick question here. We had Kevin in Sacramento. He just couldn't hold on the phone. So you want to look at cyber? I'd like to look at cyber because this is a very important period to see which. Oh, that's the wrong one. Right there. Go back again. Cyber is at this particular point. Cyber, CYBR, trading at 47.11, down 21 cents. It is, in fact, CyberArk Software Limited. They're into the security, cameras, etc., I believe. And made a very strong peak A straight after the technical deterioration on the 24th intraday, and then it closed very nicely. So the next day it ran up and pulled back, made a little choppy sideways. We went to the 9-period moving average on the 28th to 52.99, and has really succumbed not to the selling, but succumbed to the technicals where the stochastic just didn't allow it to hold the recent gains. So this is going to be very important. So the question here is, let me put the down arrow because at a peak D in the Chapman wave, that's what you look for. So the question here is there enough strength for us to start to go to leg D in the monthly chart in this phase, or will there be lower lows to come? And I must say, I keep my eye on this. I have to be reminded, but I do keep my eye on it at least once or twice a week. I'm looking at these cyber stocks. This one is called CyberArk. And I think it's just in a trading range. I don't think I would want to buy it. And I definitely, at this point, I don't think I want to short it. But I'm just going to suggest keep it on your radar, because it is in the sector that could benefit tremendously as things deteriorate around the country, as you hear more and more about the security efforts. Remember just the other day, what was it? Another firm said that their data breach was even more extensive than they thought it was initially. Was that Target or was that Home Depot? One of those that already had a breach. So you got to, they're in the right area, I think. But in the meantime, would I buy it here? I'm just saying to you that this rectangle formation says to me, I would rather wait for the next decline into the 43 to 42 area and see how that holds. And then as a trade, you might want to nibble on it with a 1-point stop and see if we can rally to the top of the rectangle formation. That's the only way I would play it now. I need a lot more information before the weekly chart even improves enough for me to say, as a longer term, if you're prepared to hold for a 15 to 20% correction because there could be a double in play, that isn't the time. This isn't the time. I think the time will come later on. So I hope that helps you. A question, Kevin in Sacramento. If you are in it, please just make your stop. 44.65, 44.70 was the low on the 15th. Why? Because if it takes that out, then it should test towards the low part of the candle of the 25th, which was 40.63. So I would prefer to treat it as a range bouncing stock and just leave it at that. I don't see it as a buy and hold at all at this particular point. Okay, so now let's go back to what we're looking at, the volatility index. See, this VIX index is at D, had a doji, went to a higher high than yesterday. Yesterday's high was 23.33, today's high is 23.80. But the stochastic is trying to turn up, but the MACD is suggesting it's going to take a big effort for it to really do that. So what you really want to be looking at is, how does the candle close today? It's at 22.42. Nice. It went below. Yesterday, it went below the 9 EMA, closed well above it. And then today, what's happening is it is... that level is at 21.14, the 9-period moving average support. And all I can say is watch this closely, because by the end of the day, if in fact it 22.45 for the VIX index right now up 1.31 to close down at 22.35, so that would have to be, let's just say, to close down 1 point from here, you would have to see a rally. The Dow's down 186, S&P's down 80. You would have to see a rally that takes the Dow to a minus 90 to minus 78, and the S&P down to a minus 8 for you to get that kind of a pullback, and probably then be more than 1 point on the downside. But that's what you'd need. I'll be back. Basil Chapman, Tiger Technicians Hour.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you'll lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now, you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com. Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Folks, we're back, and Dow's down 190, S&P's down 18.5. Look at this. Here's this 10-minute chart of the E-mini making the pattern is either the arch formation or it starts to hug the 9-period moving average and moves up. We've got a B1, B2. Will it break into a leg C? And the leg C will be at 1965.25. We're going to be watching this closely. These things happen really sudden on a day like this, so we can watch it. And remember, at the end of the day, if the VIX index is still above 21, certainly above 22, that's suggesting on this candle that the buying of insurance has been steadily increasing, and that fund managers are anticipating a weaker market, and that's why they're diving in right here. So let's go to our next caller. We've got Mike in Ormond Beach. Mike, how are you? Little delay. Hi, Mike.
Yeah, Basil, I said you may just have answered some of my question, and that is, at this point, do you think that we could still test the August 24th low of the Dow?
Now, if I say to you, absolutely, we will test it, I can give you a 100% guarantee that that'll come about, because you didn't give me a time frame. So
yeah, I mean, I've got, I have time. I don't have options or anything. I have a position in the DXD, and
This is very interesting because the DXD very much looks like the VIX index in a way. It's spiraled up to the 2796 area. This is the ultra short Dow 30 Pro shares. And right now they're trading at 2796. Pulls back yesterday to the 200 period moving average of 22.05. 2214 is the actual moving average, and it went just a tad under it, spiked up, and today it went spiking again over the 9-period moving average of 2333. Here's my recommendation. I'm desperately trying to just eliminate the short term, but the market is not allowing us to eliminate the short term. Why? Because of this pattern that I was just talking about. Let me this time go to the S&P, show you the same thing. We went to a peak C. We're holding so far the trend line on the upside. And as I said earlier, we've got two fighting patterns. You've got the up channel where it went right to support this morning. Now it's testing that support. And it makes it real simple that if the Dow closes under today's low of 16,391, then this sell-off could continue. So the way I'm looking at it, the upside is very limited, and I do suspect we're going to have those sudden moves to the upside. As we call it in a bear market, you get extreme volatility as shorts cover, and then people who have been sitting on the side, you say, oh man, I was wrong, I should have been long. Just as what happened yesterday when the market went up 200 points after the Fed, after it pulled back, you got those folks saying, oh man, lower interest rates, market always goes up. I should have been in, and they got in, and bam, they get hit today. So this market is saying, try to emulate the market itself by saying, I'm looking at the time frames, and you've got the bigger picture, and I think that is absolutely the bigger picture to have, is to be on the short side. The only thing I would say to you is that the 1-to-1, the DOG, is probably the safer instrument, but of course you're not going to make anything like you make on the 200% short. But you are in the position, and that weekly chart, especially if today's if we close anywhere in the S&P underneath 19, somewhere around there, let's say, right there, underneath 1979, and we're at 1971, that candle is really going to look like a failure candle. The MACD's lousy, the stochastic's lousy. That's the position that I think is the longer term says be in the short position. If you are able to ride out any fluctuation. See, what I've done lately is I don't want to be stuck on the wrong side if it extends against me for too long.
Right.
But fortunately in something like, say, the IBB, where we got it almost at the top, that allows me just to sit back here and say, hey, I don't think you're going back to where we shorted you. So you can mess around as much as you want. You're not going to frighten me, because my position is that the IBB has had a hat-trick top in the monthly, weekly, daily. I believe that we can say the same thing now about the weekly and monthly charts of the Dow, the weekly charts of the S&P, and I think we can not yet quite the monthly chart of the QQQ series, but definitely the S&P, the NYA. So if I'm looking at the major indices telling me that the month isn't finished, but the weekly charts are suggesting strongly that they're going to impact the monthly charts negatively by the end of today and early next week, then I'm saying to you, try not to get shaken out of the position. Right. I believe that we should be going down. Now, your question was, will we be testing? S&P didn't test the October low, and neither did the NYA, the New York Stock Exchange. The Dow went right under it. So the question is, will it test first the August 24th low? And my answer to you is, my anticipation has been that we're going to chop side. I know this pattern visually so well that I'm very determined not to let the pattern shake me out, because it's a friend of mine. I know this pattern. Right. So I'm saying, unless there's something, if yesterday's high at 16,960s in the Dow, I think it was, if we closed there yesterday, I would have had to say, you know what, we could go up even a little bit longer. But the fact that we pull back like this says, you know what, you've got a peak D in the diamonds. The S&P and the Dow itself, both of them are only in leg C. Maybe there's a chop, and we squeak out a D at some point. Yesterday's high was 16,933. So if we closed up in that area, I would have had to say to you, oh, you know what? I'd made a big deal about 17,050. If we closed somewhere around above that, we could go up for even longer. This is still the situation, but everything about what I'm looking at is suggesting that this market is under duress, that rallies are going to be rally failures, and that the best thing you can see is that, you remember in the SPY, I spoke about the SPY with that price volume climactic spike low. That says you can chop around above the low of 182.40 in the SPY for 28 days and then start to test it. And if you don't break it then and you go back to the trading range, you could stay there even longer. I don't think we've got that kind of time. I think it's next week is the critical week, that there's a rally, and then that failure is the failure that starts to test. In the Dow, it'll be under 16,000. In the S&P itself, it'll be SPX.X. I think I mentioned it earlier. Yeah, in the S&P, if you start to see a price move into the 1922 area, that's already saying, uh-oh, that's going to really mess that monthly chart up, that Roman candle. So I hope I'm imparting to you that everything I'm looking at so far says that the markets are under duress, that there's a sell mode in the daily, there's a sell mode in the weekly, and a sell signal, and possibly even a sell mode in most of the weekly chart, in monthly charts. And to get out of it, you'd have to have something spectacular to the upside. So I'm saying it to you like this because I'm saying it to myself just to keep reminding myself the bigger picture is negative, and until it changes to positive, I've got to remain in that. And most of our trades have been to the downside. So I'm just trying to protect, because some of the spikes to the upside, like yesterday, the IBB had an 8-point move to the upside. The day before, it was down 3 points when the market was strong. So you can see this is like when you watch the ocean and you've got these ripples going against larger tides, and then you get the big tide comes in, and suddenly you get the backwash. And the backwash, sometimes you can see a backwash go out as quickly as it came in. And yet it is still a backwash because the bigger tide is coming in. So I'm looking at this and I'm saying the larger tide, I believe, is going out. I haven't got any evidence so far to say that anything's changed. My Dow Quartet are still acting very poorly. GE did well, but it's all very nice within a context of the daily. The weekly and monthly are still very poor. So I hope I'm giving you a sense that the trade, the larger trade, is really the one that you're in, and I don't want to really mess around with it. The big thing will be is what if we get a rally in the S&P, is at 1974, that actually takes it above for leg D in the, because the MACD and stochastic. Oh, here's the other thing that I wanted to talk about. One of the reasons why, it sounds terrible, but if you're looking at this chart right now of the S&P that I'm showing, we just went to the trend line support. The MACD is still very strong. The stochastic's at 81%. If you go to the Dow, INDU, the Dow is at 82% in the stochastic, and the MACD is still very strong. That's the reason why I have to look at the shorter term. But I know you're looking at the bigger picture. And I just wanted to say, bigger picture, tide is going out. Smaller picture says chop, chop, chop. The big move down on the 24th was an aberration. VIX index spike to the upside was an aberration. It's just trying to take some time to get back to even right now. Hope that helps you.
Yes, it does, Basil. It's always great information, and I really, I appreciate your in-depth analysis on everything, and I learned from it, and it's been keeping me on the right side, so thanks again.
Okay, well, thank you so much. Always appreciate Mike in Ormond Beach. Have a great weekend, Mike. So this is what I'm looking at. Let me just pull back this 10-minute chart here. Look, you see the 10-minute chart? There's the fighting pattern, the arch formation. When you make a double and a triple top like that, it says, you know what? There's a lot of magnetism at those highs. And if you pierce those highs, then you've got to look to the left side. Look, on the left side, we have nothing in the 10-minute chart. There are no peaks until you get to 1979.50. So what do you say? 1973 will become the target. And that's why I'm saying on the shorter term, the reason why I didn't want to add any, we had one short position only because it's in a sector that I wanted to start a position because I know I want to add to it. But I didn't want to get into other positions at this time on the short side because we have shorts, and I don't want to be there for this whip to the upside, even if it suddenly stalls very soon. But when I see 4.63 or whatever it is in the short-term trend, I'm saying, hey, you pretty much, I don't know what it's going to take for the market to fall apart, for that trend to go up to the fives. So I'm thinking there's enough energy here to just options exploration. We've already had that 7 to 9 point move in the S&P futures that should translate into the cash based on the Chapman wave methodology of my trend gauge. So things are on track here for a bounce, and I do think we'll get that bounce, and we'll see what happens. All right. So now what we're going to do is this. I said I'd look at gold. Let's just go to gold. That's going to be very interesting because I'm just going via the dollar into gold. See, the dollar went to the 200-period moving average. Now it's trying to rally. It's up 20 cents. Am I updated? Yeah, up 20 cents at 94.74. So this is why I'm looking at the gold and I'm saying, okay, let me just get this picture right here. Gold at GC is off the highs, but the highs were 1141. It went right to the 1136. It went to 1141. Now it's at 1137. So I'll grab the 120-minute chart, and it's a leg, possible leg F, unless it's recycled. So I'll call it FB just for the moment. My eye says it has all the look of an F. Yep, there's the turnaround in the stochastic. But you know what? You have to wait for a little bit more evidence. So we go from the very short term, say, pull back in the gold, but it's still up $20. You've got a single leg A up in the daily, and most of the time when you get these single leg A or a B, you got to watch out for a pullback. The gold contract will start to really improve if the stochastic at 38% can go to 43% or higher, with the MACD turning positive right now in the weekly chart. This is going to be very interesting. So I'm going to do work for my subscribers over the weekend. We did not get into any gold at this point. We've been in and out periodically, very seldom. But there's a chance that I need to have a look at the gold as a currency of fear, regardless of the dollar at this point. I've got to try to separate it, look at it and say, is this the time? Let me just look at things like gold call. Yeah, single leg A. No, it's a B in the daily. R gold, Rand gold, RGR. Oh, wait a minute. Okay, here we go. RGLD, Rand gold. Yep, single leg. Well, it's a B as well in the day. Look at the weekly charts are failing in all these cases. Now, I shouldn't say failing. They've had a rally, but they haven't crossed over the 9-period moving average. They haven't been able to hold. They've touched it, but haven't crossed above it. I like ASA. ASA is the one that seems to, oh, look at that. ASA is a leg C. ASA weekly chart is a lot better than the others. So I'm looking at it and I'm saying, okay, a bounce could unfold here, but at this point, all I can say is it looks like a bounce. The technicals are not saying that, say, ASA trading at 828 could really go to the 9 area where it really breaks out. So maybe it could, but right now I'm looking. I'll do the work at the end of the day. I'll start looking at the gold stocks because I don't mind owning a gold stock if I think that this is a move that has more legs to it in the weekly chart other than these usual single leg A failures. So in the meantime, Dow's down now only 132, S&P's down 11. I think we have something here, folks. I think we have leg C unfolding very nicely in the 10-minute chart. Hey, this is the Tiger Technician's Hour. This is where we look at charts. This is where I can put an up arrow, and let's see what happens then.
Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Hi, I'm Steve Rhodes, host of The Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. The Art of Timing the Trade Charts has officially launched at TFNN. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind software, The Art of Timing the Trade Charts allows you to scan for Fibonacci formation setups, including Gartleys, butterflies, ABCs, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the market for stocks just beginning to form the trading patterns that many investors spend days, weeks, and even months searching to find. As part of our introductory pricing, we're offering licenses available at only $59 per month. We're so confident that you'll love this new outstanding piece of charting software that we'll even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Lock in your low price today by ordering your copy at TFNN.com.
Learn about good health and fitness. Living a primal lifestyle with Nico and Paige. Next on TFNN.
Folks, we're back. And what I've done here is I've shown you what I call the naked chart, just the candlesticks, and I've drawn in some trend lines here. So that's saying that if, in fact, the volatility index can pull back a little bit more, and the VIX right now is at 2208. Let's just say it can go to 2170-ish or a little lower. Then you can get another bounce. Meantime, there are two fighting patterns right here, and the fighting pattern suggests that. Let me just put that. Usually I do a little lower down right there. That's what I want to do right there. Okay. And that's saying that the resistance in the E-minis, the next resistance is at 1970, and the high that we just made, 1983, it can't be. Oh, that's earlier on. So 1967.50 was leg C. Maybe it'll be a peak C, I'm not sure. But we're looking at this pattern here. And it's saying that the up channel support says that the E-minis shouldn't break 1944 in this, 1944, wrong one. There it is, 1961, and should hold and make a cup shape and try to get right back. Otherwise, that arch formation is going to be winning. But if in fact it's the cup formation, that support should hold, and it should try for the 1970-ish area sometime by 1210, 1220. That's going to be very important. And we're looking at that. Meantime, back at the ranch, you've got the MACD still strong, the stochastic at 83% in the 10-minute chart with all the technicals in, and the key supports at 1961. So that's what I would say that I'd suggest to you to look at. And in the meantime, back at the ranch, let's get to our numbers. What we're looking at here is, so where do I stand? I stand here in the sense that I'm looking at support levels having held, that there is a chance that this uptrend line right here, which was just tested, is going to hold. That's the low of the day. And that by Monday or Tuesday, there at least be a little bit of an attempt to hold in this area. But funnily enough, this H pattern says you could even pull back in the Dow towards the 16,250, 16,200 level, and then have another bounce to the upside. But we're getting closer on the right side to saying a failure pattern based on the weekly chart and the daily chart is within 1 week. Let's put it this way. What is the date today? Today's the 18th. So we come back 1920 on the 21st. Yeah, this week, this coming week, by Thursday or Friday, that's going to be the really big test. Why? Because I think that you've run out of time for the bounce from the VIX index spike up and the price move down on the 24th. All we're doing here is churning, trying to use up time, and that time will be usurped if, in fact, at best, you rally to yesterday's high of 16,933. You go just a tad above it for D, and then you pull back. That's kind of the scenario issue. You don't even have to really go to the D. You've got the D already in the diamonds. So all I'm saying is that 16,750 would be the real test of strength, if it can even get there by next Tuesday, Wednesday. My bias is still to be leaning to the short side. All our positions, almost all of the positions, are really leaning to the short side. Why? Because that's where I think the action is. So I'm going to leave it at that. On the technical side of the Dow, I'll just quickly, because I know some of you use the actual ETFs, so I'll just use the SPY quickly. SPY says the high yesterday of 202.89. You could go to a leg D at 202.90s, maybe a tad higher. And 204.49 is the 200-period moving average. That's the max I'm seeing for any rally over the next few days, if there's going to be a rally. And my sense right now is that the MACD and stochastic are still so strong on the dailies. There's just enough energy to see more upside action than down at this particular point. I think the downside, just for the very short term, is done. That weekly chart is going to be absolutely important next week. Where do we close a week from today in the weekly charts, and have we started the next phase down is the big question. All right, folks, have a wonderful weekend, and
This coming Tuesday, September 22nd, Tom O'Brien will publish the 700th issue of his weekly newsletter, The Gold Report. It's amazing to think that Tom started his newsletter over 13 years ago when gold was trading under $300 an ounce. To celebrate the 700th issue, you can sign up right now at a 20% savings off the regular monthly price, and you can lock in that low rate for as long as you remain a subscriber. The Gold Report is Tom's weekly newsletter covering the gold market as well as a variety of gold mining equities. The Gold Report is published every Tuesday afternoon with a market update sent out to subscribers on Monday mornings. Tom will walk you through what's going on in the gold and metals market each week, as well as providing specific buy and sell recommendation on the mining equities themselves. Now is the perfect time to sign up for the Gold Report. The 700th issue is published Tuesday, and that's when this sale ends, so act now.
This is TFNN,